FA1 Part C. Recording and Accounting for Credit Transactions. Chapter 13. The Receivables Ledger. 3. An age analysis is useful to a credit controller. It makes it easy to see which debts are outstanding, and need to be chased up on. It is one of the various useful reports that can be printed from a computerized receivables ledger package. A business needs to know what a customer's sale ledger balances consist of, so that they can resolve disagreements and queries with customers quickly. They also need to know which invoices are long overdue so they can follow them up. If a business's sales ledger has a large number of accounts, it will be time-consuming to go through each detail, looking for items to follow up on. A lot of time can be saved by having a summary of the age of items in the sales ledger accounts in a single schedule. That schedule is known as an age analysis of receivables. An age analysis of receivables gives a breakdown of customer balances for different periods of outstanding debt. For an example of what an age analysis looks like, see page 275 of your interactive text study guide. An age analysis can be used to help decide what action to take about older debt. Once the older debt or invoices are investigated, you may discover that there may already be correspondence with the customer in connection with some of the old invoices. Some of those old invoices may be in dispute, or some of those customers may be having financial difficulties. An age analysis provides information on the state of individual customer accounts. It also gives us a broad picture of total receivables of the business. If there is a high percentage of debt, older than the usual payment terms, a business may need to check if their credit control department is performing their role properly. It is vital that customers with old unpaid debts are contacted. The invoice may have been mislaid. The customer didn't receive the invoice. The customer thought they paid it. If the customer is battling to make payment, then get a firm commitment from them on when payment will be received. These are some of the other types of reports that can be generated from a computerized receivable ledger. Sales day book listings are a way of keeping track of all items entered in the receivable ledger. The information in the listing will be the following: date, account reference, transaction reference, the type of transaction, for example, invoice, credit note, net total before sales tax, VAT, sales tax, VAT, gross total. If the receivable ledger is not integrated with the general ledger, then the sales day book listings can be used as a posting summary to the general ledger. Statement of accounts are sent to customers at the end of every month, to tell customers how much they owe, with the details of all their transactions. The statement can be used by the business internally, to check the details of the transactions. Sales tax, VAT, analysis. If the rate of sales tax, VAT, varies, then this report will show how much output tax, VAT, is invoiced at the different rates. Sales analysis. This report allows the business to analyze their sales. A list of customer accounts is a summary of all the receivables accounts from the receivable ledger. It is possible from this list to select and display the customers who have exceeded their credit limit. This list presents more selectively the information that is included in the age analysis of receivables. The customer mailing list, held on the sales ledger, is a powerful marketing tool. It may be more up-to-date than a mail listing held in a separate database. Customer communication means having a record of all communication with customers. Comprehensive and efficient record keeping will enable the accounts department to respond promptly to customer queries and give them the necessary information to chase up late payments. Having good communication is an important part in having sound customer relationships. 4. These are some of the reasons that a business may not receive payment from credit customers. The customer has become bankrupt or they are out of business. Dishonesty may be involved. Or a foreign exchange control in another country may prevent a customer from paying. So then a business may give up expecting payment and write off the debt as a lost cause, or as an irrecoverable debt. When it has been decided that a debt will not be paid, it will stop being an outstanding debt, and become an irrecoverable debt. The double entry for an irrecoverable debt is as follows. Debit, irrecoverable debts account, an expense. Credit, total receivable account. In order to write off any irrecoverable debts, it needs to be authorized by a senior official in the company. For an example of how irrecoverable debt is recorded, see page 227 of your interactive text study guide. A business can claim sales tax, VAT, relief for irrecoverable debt. If the debt is 6 months or older from the time of supply, the debt is written off from the business accounts. The conditions for claiming sales tax, VAT, relief from the authorities will vary, according to local regulation. The double entry for sales tax, VAT, relief for irrecoverable debts will be debit, sales tax, VAT, account. Debit, irrecoverable debts. Credit, total receivables. 5. The allowance for irrecoverable debts may be specific, for a specific customer's debt, or a percentage based on past experience. An increase in this allowance is treated as an expense. Allowance for receivables is the estimated percentage of debts which are not expected to be paid. This is the end of Chapter 13. What will follow next is the quick quiz. After the quick quiz, do the online questions for Part C, Chapter 13. It will be good practice because the online questions are set out like the exam that you do at the end of the course. They will also test your knowledge of this chapter. Quick quiz. Question 1. What does the receivables ledger contain? Question 2. In manual accounting systems, the personal accounts of customers do not form part of the double entry system. True or false? Question 3. How might you check the accuracy of the amounts recorded in the receivables ledger? Question 4. What is the function of an age analysis of receivables? After doing the quick quiz, do the online questions for Part C, Chapter 13. Do the questions, until you achieve 80%. Replay the lecture as needed.